Well, hello, hello, hello. It's Tyrone Jackson, the Wealthy Investor, coming at you with another hot video. All right, today I'm going to talk to you about technical analysis versus fundamental analysis. Technical analysis versus fundamental analysis. Now, if you're new to the stock market and you're still learning how to trade and invest, just listen up and you're going to learn something new on this video. It may feel it's a little bit above your head, but I assure you, if you just stick with me over time, you'll be able to get it. If you have experience in the stock market, one of the things that you want to do is not criticize what I'm about to say, because as I talk about technical versus fundamental analysis, I'm going to be talking today about what? S&P 500 companies. So those large market cap stocks that comprise the S&P 500. And if you've actually been following the S&P, you know it's really now the S&P 501 because Google has two different class shares of stock. All right, so let's start off talking just a little bit about keeping an open mind, because that's how we learn brand new things in the stock market. It's really not as complicated as they keep telling us. Here we'll see a list of S&P 500 stocks. Very often you'll recognize these names. They're companies like Akamai Technologies, Alcoa, right? Allstate. These companies very often have very large advertising budgets here. And so just because you see them on television doesn't mean that they're good investments for the stock market. They just mean that they're recognizable names. American Express, AXP, I see over here. Let me see. There's Apple, of course, which is part of the Dow, and which means they're automatically in the S&P, AT&T, and the list goes on and on and on and on. All right. So today I'm going to give you a secret to being successful in the stock market that most teachers don't teach their students. You don't hear anybody on the web talking about it, and it's the combination of technical analysis versus fundamental analysis. Now, I'm going to pull up one stock as a member of the S&P. You know that this is Bank of America, BAC. Now, the tenets in the Wealthy Investor Program is that we make money every single month no matter where the market goes, primarily through covered call writing. We have a saying in the Wealthy Investor Program, we don't marry stocks, we only date them, right? And we use very, very light technical analysis to determine whether we want to buy a stock or sell it. Our primary strategy, as you should know by now, is covered call writing because that brings in guaranteed income. So I'm going to choose an S&P component like Bank of America, ticker symbol BAC. Today's trading at 1559. Now, I teach my students this all the time. The very first thing we do before we go on a date in real life or a date in the stock market is we look at a picture. Now, I prefer to see pictures where stocks are just rising, right? It's an upward slope. When I look at this picture, just the examination of this picture alone, right in here, is a form of technical analysis. So Bank of America, the big mistake I see a lot of people making is they like cheap stocks. And when I say cheap stocks under $50, cheap stocks that are under $50 are cheap for a reason. It's usually because nobody wants them. And if you really want to make money in the stock market, you have to know where the institutions are. So the hedge funds, the college endowments, the mutual funds, and they don't want to be in Bank of America right now in large amounts. Someone is going to say on Facebook, but that's not true, Tyrone. Yes, because if you're an index fund, you have to be in B of A. Yeah, but what if you're not an index fund? What if you're all about this growth thing? All right, so when I look at this picture, I already see a picture I don't like because of the stock's performance. Technical analysis is basically any time you're looking at the stock price and how it moves or function. And again, just for clarification, I'm not talking about Fibonacci lines or MACD or moving average lines or breakouts. Just generally keeping it very simple. Do I like this picture? The answer is no, even though the stock is cheap. If I go down here and I look at the 52-week range, I see that 52 weeks ago it was at $13.25. Its high is 1803. Now, here's the secret that no one is talking about, and I'm going to show this to you time and time again. When we see a picture of a stock that peaks and then falls back and all of that, why? It's because if you go on Yahoo Finance and you look at the income This is known as fundamental analysis. Do you see this top line? And in the Wealthy Investor program, we just focus on top line revenue because that's the thing that matters the most. So I've got my total revenue over here. I'm looking at the revenue total sales for Bank of America over the past 3 years, and it's a lack of stability. I have 100, these numbers in the billions, 115 billion, then sales dropped on the top line to 100, then 101. That is not stable fundamental growth. Therefore, you're going to get what? A picture that looks like the one that I just showed you. If I get back to the 1 year chart, that's unstable. Why? Because the top line revenue is not stable. You see, being successful in the stock market is not a big guess. You need a methodology and approach that you can kind of hang your hat on as you put your money at risk, and you'll be right more often than not. I know there are all these books out there and people love analysis, and we think the more intellectually we feed ourselves, the more successful we'll be in the stock market. No, you won't. Let's take a look at another stock. Okay, it's understanding technical versus fundamental analysis. This is Best Buy, ticker symbol BBY. Now, let's do some light technical analysis and just look at the pictures. First of all, the stock is under $50, which is telling me institution involvement is low, and I need them coming in, buying hundreds of thousands of shares to push the stock price up. But look at this. You see, we have this rise here, and then we have this dramatic drop off, and then rise. I don't want to be on a date with someone who's unstable like that. If this chart were emotions, look at this. I don't want to buy stocks that have the tendency to have huge drops or decline in revenue. For the people who are really technical, you're going to say to me, yes, we have this, but this is called retracement and a pullback. But I don't want to be in that position. You'll see why in a second. This is a stock that I'm either going to cover call right, or I'm going to own for the long term with my cover call profits. Look at the 52-week range. Its low is 22.15. Its high is 44.66. 44.66 is the high. This stock is now trading at 31.14. I can guarantee the fundamentals are going to be off in Best Buy because most people are not going into stores to buy electronics. Therefore, the money that they earn is going to be less. Everybody's going to Amazon.com. But look at the annual revenue, 49 billion, 45, 42. Do you see this falling revenue here? When you have falling annual revenue, you're almost always going to get what? A stock price that declines. You see, when we invest in a company, we're investing in the company because they're making money. Look at this. This is a 5-year chart. You see how this keeps going down, 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 down. Then we had a retracement and the stock started to rise. Some people go, it's a buying opportunity if you get down here at the bottom. No, it is a losing opportunity. Right? So if we combine technical analysis, just looking at how a stock performs, with the fundamentals, we see something very interesting. Now watch this. Notice the contrast in Time Warner Cable. In one of my prior videos, I did this whole thing about the cable market and how it's growing. This stock is at $145 a share. The ticker symbol is TWC. It is up over what? 40% in the last year? 52-week low, 106, been as high as 150. It's very close to its 52-week high, which is telling me what? There's conviction in this stock because the institutions are there. How does Time Warner run its whole business? Off of subscriptions. Now look at the revenue on an annual basis. S&P component, we see 19, 6, 21, 22. Do you notice that the revenue is rising? Yes, if the revenue is rising, what's happening to the stock price? This is happening to the stock price. You get a picture of a stock that is going higher. So let me just sum up this video. Without the use of the most complex technical tools, if we just looked at pictures, it's telling us where the institutional money is. If we look at the fundamentals, we see that this company is actually making gobs and gobs of money. This stock makes a better trade, something I'm going to jump in and out, or a better long-term investment. You see, even a year ago, if I had grabbed the stock when it was around $100 a share, I would be up what? 45%. Cheap stocks are cheap because no one wants them. Stocks that go higher is because there's a demand for them. You must know, if you have a brokerage account, the difference between technical analysis, looking at a picture, and your fundamental analysis, or as some people say, the slang term on Wall Street, the fundies. Tyrone Jackson, the Wealthy Investor, saying, I hope that you've learned a little something and that this video makes you lots of money and you choose stocks differently because of your financial education.